No.
Okay, I want to welcome everybody in to the Butler and Simpson County. We're Greg Drake and myself. We're hosting this beef cattle management short course, and so want to welcome everybody out tonight. Basically, the format is that Dr. Burdine is going to start here in a few minutes, and want to thank him for being with us tonight. He'll talk for about 45 minutes. Definitely can chat in the chat box. You can text any questions that you might have, or hold those till the end. And the last 15 minutes will be a question and answer session, interactive question and answer session with Dr. Burdine. So this is the first of a three-part series. They're going to be on consecutive Tuesday nights. So we've got this one tonight, February the 6th. We've got farm layout for maximum efficiency with Dr. Morgan Hayes. And February 13th, we'll be utilizing warm season annuals with Dr. Chris Toich. One thing about these is that we will always start on time and we'll always end on time. So 1 hour. So we're going to go ahead and get rolling with that. I would like to introduce Dr. Kenny Burdine. Again, thanks for being with us tonight. He is an ag econ specialist at the University of Kentucky, just a wealth of information. And tonight, Dr. Burdine is going to give us a market outlook and also kind of just talk about the current situation that we're in now and then give us an outlook for the future. So with that, I guess I'll let you go ahead and get started. And feel free to, again, text any questions that you might have along the way. And with that, have at it.
All right. Thanks a bunch, Jason and Greg. So Jason, I'll just kind of start going through things. So if you don't mind, if something pops up in the chat that I need to deal with right then, feel free to stop me while I'm talking. Okay.
Okay. Yeah, I'll let you know.
All right. Sounds good. So we will roll from there. So I'm going to just talk about the market a little bit first. I'll kind of give you my impressions of what we saw last year. I'm going to give you kind of my expectations for the current year. And then I slipped some things in here too that I would just want to share with cattle producers, management-oriented ideas, things like that I kind of enjoy doing in a setting like this. So that'll be my plan. Excuse me, y'all. Still got a little cough. That'll be my plan, and then I'll stop and take questions, of course. All right. So first things first, I've showed this at a lot of the programs that I've done in the last probably 3 or 4 months, and I just like to make this point. You know, you go back and think about that 2014-15 time period that we had. What are we, 8, 9 years removed from that now? But that brought a lot of expansion in the cow herd. We added a lot more cows here in the U.S. The cow herd peaked in 2019 and has been decreasing since then. Now, you know, generally speaking, this year's cow herd, this year's calf crop, next year's beef production. So given that our cow herd was at its peak in 2019, you would have expected 2020 to have been the high water mark for beef production. You know what happened in 2020? We had COVID. COVID pushed some of that 2020 production into 2021. 2021 production was higher. 2022 was a horrible drought year across virtually the entire U.S. So we killed a lot of cows and put a lot of females on feed. So bottom line is, although the cow herd has been getting smaller since 2019, last year, 2023, was the first year we actually saw a decrease in beef production. And it was fairly significant. This isn't final yet, but it's going to be somewhere in the ballpark of 4.5% to 5%. So I want you to notice how that compares to what we saw last year in both pork and poultry, our two main competitors as beef producers. They were both up a little bit. We saw a pretty sizable decrease in beef production last year. We're going to see another sizable decrease next year, or this year. Not quite as much as we saw in 2023, but it's definitely going to be smaller as this cow herd is still smaller. The calf crop keep getting smaller. I will point something out briefly to you. We're expecting about a 1% to 2% increase in pork production in 2024. That's driven almost exclusively by productivity, more pigs per litter, basically. I also want you to notice that we've got some fairly small production increases expected in the broiler sector. Historically, what economists see is that we produce 2 to 3% more broilers year after year after year. So the fact that that's fairly small actually bodes well in terms of competition for beef at the meat case. The story in 2022 was all about drought. I mentioned this a second ago. We were dry in virtually all of cattle country. Probably 89% of the cattle herd was impacted somehow by drought in 2022. So we came into last year with the smallest cow herd we'd had since about 1962. Now, in all fairness, I've tossed that number out a lot and it's accurate, but we're much more efficient now than we were then. So, for example, we produce about 60% more beef on that number of cows today than we would have back 60 years ago. But nonetheless, the cow herd's small. And that really drove the cattle market for the first 9 months of last year. Now, I want to kind of jump right in here to some details I think are important to think about. What I'm showing you here in this chart, this is nearby feeder cattle futures. So, bottom line is it's the current feeder cattle futures contract. So when you see a price series like this, you want to think about an 800-pound feeder steer out west. Think Texas, Oklahoma, Nebraska. But if the feeder cattle market had a pulse, this would kind of be that pulse. You can see those really high price times in 2014 and then again in 2015. You can also see that for a short period of time in 2023, we actually saw higher price levels than we saw in 2014. What's a little harder to see though is that feeder cattle futures contract, so the value of those heavy feeders out west was about $1.82, $1.83 in January of last year. By December, that was about $2.18, $2.19. So if I had told someone back in January that the feeder cattle market would be 30, 40 cents higher a pound than it was then at the end of the year, a lot of folks would have been pleased. But because we saw so much higher price levels, especially kind of in late summer here, this is August, by the way, the peak right there. A lot of folks, I think, got kind of focused on that. So I think it's important sometimes to kind of take a step back, and as frustrating as the last 3 months of 2023 were, not lose sight of the fact that the cattle market got quite a bit better throughout the course of 2023. Fed cattle prices were stronger. So I'm talking about fed cattle prices out west, cattle at the knife. They flirted with 190 at the national level. They're on the board in the 180s by the end of 2024. All indications are they continue to improve. What I want to talk about what drove that market downward from September through basically from mid-September to mid-December is when the major drop that we saw occurred. A couple things I'll point out. So first of all, dotted line here is 2022. Sorry, no, I apologize. Dotted line is 2022. Blue line is 2023. Again, the cow herd was smaller in 2023. So it made perfect sense that we had fewer cattle on feed in 2023 than we did in 2022. Notice though what happened after September, that kind of inverted. And for the last 3 months of the year, we actually had more cattle on feed in 2023 than the year before, despite the fact the cow herd was smaller. That in and of itself seems strange. A couple things happened. First thing I want to point out to you is that we saw some really big placement numbers, feedlot placement numbers in September and October. Now, they came down a fair amount in November and December, but these 2 months were a big driver as to why those on-feed numbers increased so much. A couple points I'll make. Number one, it was not as dry as it was in 2022 last year, but I can attest to this where I play farmer here in the Central Kentucky area. We were dry in some places. And I think we did see some cattle either move out of stocker type operations or maybe just simply get weaned early and get placed on feed. I think that was a part of it. Number two, you cannot ignore the fact that we did see a pretty big increase in the number of live cattle that came into the U.S., especially from Mexico. Anytime cattle prices are high, you're going to see an increased interest in folks moving cattle into the U.S. We saw that in the fall of 2023. The last point that I'll make, and I don't have a chart for you, but ordinarily what we see is we see slaughter cattle weights decrease from summer, well, really from, I guess, the first of fall to the end of the year. What we saw last year, though, especially November, December, was those slaughter weights were going up. So as feed got cheaper, feedlots were making the decision to simply feed cattle a bit longer and add more weight. That made perfect sense. But when number of days on feed goes up, that also tends to kind of expand cattle on feed numbers. So those were kind of the fundamental reasons behind the drop that we saw. Now, in terms of Kentucky price, I track two price series regularly for you all. I have access to a lot of stuff, but these are the two that I kind of use as my baseline. I track a state average 550 pound steer calf. He was right around upper 240s, right around 250 in the summer. He pulled back to maybe the low 230s by the end of the year. So we shaved about 20 cents a pound off of the value of those calves from summer to the end of the year. The majority of that, though, was just seasonal. I would have probably said that maybe I would have expected 15 cents of that 20 cents anyway, just as calves get cheaper in the fall when more move to the marketplace and when feed's not, or when pasture's not growing. On the right side, my heavy feeders, I track an 8 weight. We actually shaved almost 40 cents a pound off these heavy feeders from September to December of last year. So calves probably felt about half of that market drop. Feeders felt the vast majority of it. Heavy feeders did. They're obviously much closer to the knife. A lot of folks, for this reason, I think they kind of wanted to go back and look at this particular time period from September to December and say, that looks a whole lot like what we saw coming out of 2015. And in terms of timing and in terms of magnitude, that's kind of a fair question. It kind of did look that way. Few points that I'd like to make and a reason why I don't think we're in the same place. Now, number one, although we've had a lot of rain recently, if you really go back to the bulk of the past year, even honestly up until about first of the year, we were fairly dry in the southeast and dry in pockets of the southern plains. That's kind of number one. Number two, cow slaughter was down last year by about 11%. But, one thing I think economists like myself are bad about, we like to compare things to the previous year. It's a nice way to do a quick comparison. But you have to always remember that when you're just simply comparing 2 years, if one of those years is an outlier, you've kind of got to be careful what you make of that comparison. So because it was so dry in 2022, and because we killed so many cows, we culled the cow herd so hard in 2022, it makes that 11% decrease a little bit deceiving. So here's another way to frame the same exact thing. If I look at 2023 beef cow slaughter as compared to 2021, 2021 was a more normal year. Beef cow slaughter was down about 1%. And the point that I like to make when I say that is the cow herd was about 5% smaller. So another way to say that is we culled the 2023 cow herd harder than we did the 2021 cow herd. So all indications are we were still sending a lot of cows to town last year. Had a perfect storm for that, frankly. We had high input costs. You're aware of that. Fertilizer probably being the main one you think of, but certainly fuel and feed were high as well. We had the dry weather, and we had high cull cow price. On top of everything else, cull cow prices were very strong. A lot of cull cows in the summer, moving for $1 a pound and better. Some pushing $1.20 or so. Even right now, we're still in the 80s and 90s for a lot of our good high quality cull cows. So when you've got high cull cow prices combined with dry weather and expensive cost levels, it's going to pull a lot of those cows to market as well. If you look at heifers as a percent of total cattle on feed in a year like 2014-15, when calf prices are strong and we're wanting to grow the cow herd, you see heifers make up something like 32 to 34% of on-feed numbers. Right now, they're kind of in this 39-40% range. So again, there's just no indication that we're expanding the cow herd just yet. If we were expanding the cow herd, we would see fewer heifers on feed. And the last point I want to make before I leave this topic is that we're going to have less competition in the short run from other meats. And I think this is an important thing to think about. Of the three main meats that Americans eat, beef, pork, and chicken, understand that beef is always going to be the slowest to respond to market signals. I like to say that I can track poultry production in weeks, pork production in months, and beef production in years, and there's a lot of truth to that. So an example I'm going to use going back to 2014-15 is in 2014, we had good prices across the board. We were making money in the beef business, the hog business, and the poultry business. We all kind of got the expansion signal. Okay. It was 2 years before we actually saw more beef on the marketplace because it took some time to expand the cow herd and see an increase in beef production. But the very next year, 2015, we saw a 9% increase in pork production. So that was another reason why those prices dropped like they did in 2015. If you look at hog profitability last year and the current year, well, so last year and currently, compared to what we saw in 14, there's just no comparison. So we're not going to have the same interest in growing pork production. Certainly with avian influenza and some plant shutdowns, we're not going to see the increase in poultry production either. And both of those things bode well for the likelihood of these price levels staying in place for a while. So bottom line is, going through all that, I guess the point that I would leave you with is in 2015, it looked like, things were starting to turn in terms of price. By the end of 2023, start of 2024, the strong fundamentals are still very much in place. So I think our odds are very good for a very good market in 2024. Now, again, I'm going to make the point that I do think 2023 was not a bad year in the cattle business. It was our best price year since 2015. We had challenges, but price-wise, we would take that most years. I think the odds are that prices are even stronger in 2024. I think these heavy feeders and folks tracking these prices right now is tough. We had such tough weather week before last. Comparisons are really hard from last week. But if those 8-weight steers right now are kind of in that 210 to 220 range with some groups in the 220s, I think we'll see them increase by as much as about 30 cents a pound from now to where they'll be, I think, in about fall of the year. So we got that much carry on the board. I really think our calf prices by spring can actually be higher than they were in summer of 2023. And at the same time, if you're a cow-calf operator, cull cow sales probably account for 20-25% of your revenue on the cow-calf operation. All indications are that we, barring anything crazy weather-wise, we should see even fewer cull cows in 2024. And as tight as beef supply is, ground beef demand should be very strong, and all that bodes very well for a cull cow market. So I'm pretty optimistic about 2024, and I want to make sure you understand. I feel like 2024 will be a good year for us in the beef cattle sector. There are wild cards out there, and demand is the one that I think we've kind of got to think about. I don't know what to make of all the geopolitical stuff. It's just hard to get a handle on that. We've been talking about war in the Ukraine for a long time. We've got unrest in the Middle East. We've got all those things kind of at play out there that could potentially weigh on this market. I've been surprised, given interest rates and inflation levels, the economy's kind of rolled along like it has. There may be some vulnerability there. I hate to say it, but it's a presidential election year, and it's going to be an interesting one. Everything I would think was it'd be a very interesting one, and you never know how markets respond to kind of a constant feed of political ads and so forth throughout the course of the year. So that's the wild card. But I want to make sure you understand that generally speaking, supply fundamentals look fantastic, and I feel pretty good about 2024. Now, I want to shift gears and just share a few management-oriented things. I've kind of shared my ideas on where I think the market's likely to be. I'm very optimistic about it. I'll give you some kind of point forecasts and things to kind of think about. But to me, the key, probably the most important measure that I like to have a feel for when I talk about cow-calf profitability is weaning rate, which is just simply the percent of cows that wean a calf every year. So it's a fairly simple measure. If you're running 30 cows, to keep the math simple, and if those 30 cows, are able to wean you 27 calves, that means 90% of the cows that you expose to a bull weans you a calf. If you wean 24 calves, that's 80%. There may not be any number that tells me any more about your revenue stream than that one when I combine it with price. The other thing I want to mention is that if I combine weaning rate with weaning weight, I get something very similar to a yield measure. So I grew up just south of Lexington. I'm sitting in my home right now in the same county I spent my entire life in, Jessamine County. So I grew up in the 80s and 90s. I was born in 1978. So I grew up raising tobacco, surprise, surprise. And if you had asked us about a given tobacco crop in a given year, we probably would have said something like it made 2,300 pounds an acre or something like that. We would quote you a yield number on a per acre basis. If I combine weaning rate and weaning weight, I can get kind of a yield number per cow for a cow calf operation. For example, if my average weaning weight were 550 pounds and 90% of my cows weaned a calf, 550 pounds times 90% is 495 pounds. What that means is every cow that I maintained, that I exposed to bull and tried to breed, produced me on average 495 pounds of calf. That is a yield measure. There's two ways I can increase that. I can either wean larger calves or I can wean a larger percent calf crop. So that's kind of a yield measure I like to kind of think about. Now, if I go back to weaning rate for just a second and kind of apply it to kind of a point forecast for 2024, if you just said, Kenny, give me your best guess about what calves are going to sell for in spring of 2024. I'm a fall calving operation. I'll be selling calves about April. I'm going to say something like this. I'm going to say for planning purposes, I think your average calf might sell for something like 250, 260. Now, if I'm right about that, that probably means those steer calves are around 270, heifers around 250 or 245, something like that. That's going to vary some. Anytime I give you a state average forecast, especially on calves, you can just assume that you will see some calves 20, 30 cents higher than that, higher quality groups and large lot sizes. And you'll see some that'll sell 20 and 30 cents lower than that. But I'm going to use something like 255 for kind of a steer heifer average. I think our state average steer price will be up in the 260s, if not 270s, for a 5-weight steer by about April. I also want you just to notice, though, the difference by weaning rate, okay? I always say good operations should be able to wean about a 90% calf crop. So if let's say I'm exactly right, and your average calf sells for about 255, that's about $1,400 per calf, right? When I discount that for open cows at 90% weaning rate, that becomes $1,262, okay? At 80%, I've shaved $140 off of that number. So revenue is greatly affected by weaning rate. I like to make the point too that the truth is even some of these lower weaning rate levels might work okay in a year like 2024. In a lot of years though, they won't. This would look very different if this was an average of like $1.80 or $2 a pound. So it really does matter. In terms of kind of my best guess for fall, I might shave about 15 cents off of that for a spring calving herd that calves in the fall of the year. Maybe steer heifer average price is something like 240. Maybe those 5-weight steers are 250, heifers are 230, and a calf average is something like 240 a pound. But either way, I think the potential is there for a pretty darn good year in the cow calf sector in 2024. I want to share just a few more things, and I'll move on from this and share some backgrounding stuff. But something I've talked about in a lot of settings is the importance of calving interval. You want to look for calves you want to look for cows that calve every 12 months. And one of the reasons why I like defined calving seasons is because it's easier to manage something that's set up like that. I always say if you're a year-round calver, just simply start by managing calving interval. Just simply start by jotting down your calving dates. And then, you want to start looking for those intervals. For example, if you've got cows that have a 15-month interval between when they actually calve, they're effectively open once every 5 years. So that's 4 calves in 60 months. That's already an 80% calf crop. So just thinking about that kind of stuff is helpful, and it feeds back into weaning rate very much. The other reason why calving distribution and calving season matters is because there's a lot of reason to believe that when you unload weaned calves at stockyards, that the more of those that stay together in groups when they sell, the higher that price is going to be. So this is some data that Greg Hallich and I put together back in 2015. I use this in a lot of my cow-calf talks, but along the x-axis here, the bottom is simply lot size, how many ran through the ring at one time. And then across the y-axis on the left here is just the price difference. Okay, so this is in dollars per hundredweight. So kind of here's the extreme. This is a truckload lot, and this is a single. On the far right, that truckload lot outsells that single by about 21 cents a pound. That seems like a big number, folks, but I believe it. You know, watch groups roll through the yards, then watch a single come through, and you'll see a huge difference in price. The reason why I like this chart is because the real story is on the left-hand side. Okay, so this first point here is a single. Okay, next dot is a group of 5, and here's a group of 10. Okay, so for example, holding everything else constant, a group of 5 outsells a single by about 11 cents a pound. Holding everything else constant, a group of 10 outsells a single by about 15 cents a pound. And I just like to share that because the truth, what the take-home message here is, I don't have to have truckload lots of feeder cattle to get the bulk of that benefit. In fact, by the time I get to groups of 10, I've already captured about 2/3 of the price benefit associated with truckload lots. And another way to think about it is, it's much easier for buyers to deal with groups of 5 and 10 than 5 or 10 times as many groups of singles. And that's kind of the story here. So even for a small operation that only maybe moves, 30 and 40 calves at a time, if I can just get them similar enough and born close enough that they weigh similarly enough when they're sold, that I can get them in groups of 5 and 10, I can add quite a bit to their value just by doing that. Where I get hammered is having calves that get pulled out of singles and sold in small groups of maybe 2s and 3s. So just think about, those small lots as you go forward. So for that reason, I think late calvers are oftentimes a group to kind of target as culling replacements. And then I always mention this too, larger cows that don't wean proportionally larger calves are also one. There's a lot more cost to these larger cows, so they've got to be weaning larger calves to cover the additional cost. A few more things. I updated this at the end of 2023, so I think I've only showed this maybe in one other setting so far in 2024, but over the course of the last 10 years, so from January 2014 to December 2023, at the same weight, at 550 pounds, a steer calf has outsold a bull calf by almost 13 bucks a hundredweight, 12.69 a hundredweight. So I always like to point that out. So, value is added this way to calves. Folks, some folks choose to sell bulls, and that's your business for different reasons, but understand that there are folks whose business is based around buying those bull calves, cutting them, straightening them out, and then reselling them down the road heavier weight. So just understand value gets added that way. I haven't had this as long to be able to do. We didn't have this until I think actually 2014, maybe the first year I had this, but I can also look at muscling. The way that our market reporters break up our calf markets, they group my medium and large train number 1s and 2s, my heavier muscle calves, and then they group my 2s and 3s, the lighter muscle calves. So think about a muscle score difference. But again, over that same 10-year period, almost 20 cents a pound difference in those heavier muscle calves and lighter muscle calves. So about $100 a head for a 5-weight steer. So if you've got some calves that look similar in terms of weight and they're getting pulled off and sold by themselves, you might just want to ask if muscling is why they're doing that. You may want to think about those as some potential cows for culling, or if it's a bull pattern, you can deal with that as well. But lighter muscle calves oftentimes take a pretty big discount. There's kind of some data to support that. I'll share a few thoughts on cow calf and then shift on to some backgrounding things here, and we'll answer questions. But again, I'm optimistic about 2024. The other thing about it, I would say, is it's going to take some time to grow this cow herd. So we really should get multiple good price years. I think 2023 was kind of our first pretty good year. I think 2024 can be better. I think 2025 should also be a good year. So I think it's a good time to be in the cow calf business overall. I get this question a lot. Folks will be asking, well, what are calves going to be $3 again? I think you'll see some $3 calves in 2024. 24. We're actually getting closer as we speak. But I always like to make this point. There's something about $3 in terms of price that excites folks, but don't get so focused on price you miss the bigger picture. And don't forget about what we multiply by price. Case in point, I can take a 400-pound steer calf and sell him for $3 a pound, and he sells for $1,200. Okay. I can take a 550-pound steer calf, sell him for 40 cents less a pound at $2.60 a pound, and he brings $230 more per head than that $3 calf. So just don't get so focused on price you lose the big picture. Weight matters just as much. We're not maximizing price, we're maximizing profit. Truth is, in Kentucky, cow herd is a lot smaller than it's been. We've probably lost, I don't know, maybe as much as 20% of our cow in the last several years. I think we will start to see cow numbers grow at some point in the state. I don't think Kentucky cow numbers will grow like some other states will. One point that I always like to make, though, is don't forget there are ways to invest in your cow herd besides adding more cows. And I think that's important. So, for example, if you're someone who doesn't have facilities to wean calves, to vaccinate, to sell steers instead of bulls, investments in facilities can be a very good way to utilize an influx of cow-calf revenue. I'm a big believer in grazing. You can set up grazing and watering systems so that you can rotationally graze and reduce your dependence on stored feed. That can lower costs and make you more efficient year in, year out. Genetics are good investments. Folks, operating loans are very high right now. Okay. If you can just simply build up some working capital, and retain some money on the farm so you're less dependent on operating lines. Right now that may be an 8, 9, 9.5% return using your money versus someone else's. So think about things like that for your cow-calf operation. I want to just very quickly kind of walk through a backgrounding scenario. So I'm assuming I've got some cow-calf folks here and also some background in the stocker type folks. So let's very quickly walk you through a backgrounding scenario. So to me, the best way to do something like this is apply it as best I can to the current time period. Okay, so I'm going to look at what if I was going to place a 550-pound steer right now, put him on some sort of feeding program for 120 days, gain about 2.5 pounds of gain per day. So we're going to add 300 pounds to him. I'm going to use kind of a simple ration here, 1.5% of body weight of a 3-way blend, corn, gluten, and soy hulls. And then value that about $2.85 a ton. That may even be a little bit high for your end of the state. That's about where it is on my end of the state. 1.5% of body weight of grass hay at about $100 a ton. Again, if I do that for 120 days, I'm going to have an 850-pound steer in May. Interestingly enough, I did this, let me think. I did a program on Wednesday. So actually on Monday. So almost exactly a week ago. The May board was at 240. Right now it's at 250. So if I just kind of plug this into a basic backgrounding budget, if I use a 10-cent basis and say, okay, if May board's at 250, that means in Kentucky I can probably sell a decent group of 8 weights for about 240. They bring a little over $2,000, $2,040 ballpark. I have to kind of make a guess here. State average price for 5 240, 250 last week. A lot of your groups of good calves were kind of around 270. So what I'm saying here is I think I could pretty easily put together a group of calves for 270. I could probably even do better than that. I've got my feed prices in there. I've got a 1/4 pound a day of mineral at 40 cents a pound or $20 a bag. I've got $30 for vet medicine expense. I've got $30 for sale expense. I've got $15 for hauling. I've got $10 for other expenses. Water would be one. I didn't build in water, but if you're on municipal water, there's kind of a charge there to cover it. For an operating interest at 9%, notice how big enough it's $48. That's what I'm charging there is the value of the calf plus half of the feed cost. And I'm running 2% death loss. But the point I want to make here is, given as high as feed costs are, and even valuing that calf at 270 right now, which is a strong price, and 9% interest, I'm still projecting a pretty attractive return to someone who wanted to buy calves right now feed them for 120 days, and then sell heavy feeders in the late spring. So that's pretty encouraging to me. That's just kind of a point type thing, but just a few sensitivities to kind of think about. Naturally, every nickel in sale price is worth about $42.50. So a nickel on 850 steer is $42.50. A nickel on calf price is $27.50. So another way to say that is if I could get those calves bought for $265 instead of $270, I get them bought a nickel cheaper. I'm going to add $27.50 to that return. If it costs me $275 instead of $270, if I spend another nickel on those calves, I'm going to shave $27.50 off of that bottom line. A 10% change in feed cost worth about $24. 1% change in death loss going from 2 to 3 or 2 to 1. I'm either going to add or subtract about $15. And again, I ran operating interest at 1%, sorry, at 9%. If I brought that down to 8%, that's $5. 10%, it's $5. That's a point here to make too. I'm basically assuming you're borrowing money at 9% to buy that calf and then buy the feed. But if you've got working capital, if you don't have to borrow money for those things, and this $48 becomes a return to you at 9%, not a cost of money. So kind of worth thinking about. Wrapping up here, I always like to do this. So here's kind of my point budget. Okay, I notice I got about $137 estimated return to land capital management. I'm going to drop that right there. What I want to look at now is, okay, how does this return change based on what I pay for those calves? So naturally, as I can get those calves bought cheaper, return looks much better. As I spend more on those calves, it looks worse. But I think this sensitivity is important. These margin type operations, backgrounding stocker operations, very much to the supply. Oftentimes money is made on the buy. If I can get a group of calves bought for a good price and keep them healthy, I'm halfway home. So don't discount the importance of getting a good group of calves bought and being strategic about the price that you pay. Here's the exact same thing, except now I'm looking at sensitivity across sale price. Again, I'm assuming sale price in May about $240. That's May futures minus 10 cents. That's a defendable number here in Kentucky. But again, every dime of improvement in price is worth $85 on those. So, at some point here around, it would be, I guess, around 224 or so, this return goes to zero. So just knowing how sensitive returns can be to both my sale price and purchase price are important. If something like this is useful to you, I'm happy to send this to Jason and Greg, and they can share it with you by all means. I'm always happy to send anything that I do so you can study it further. Final few thoughts here for margin operations. If you're a backgrounding operation or a stocker operation, understand that what really drives value of gain, meaning what really drives the additional money we make by adding weight to calves, is what it costs feed yard to put gain on. Feed has gotten cheaper. By no means is feed cheap. This is some data out of Kansas State. They're focused on feed yard study. They were estimating that feed cost per pound of gain was about $1.45 back at the first of the year. It's about $1.27 right now. Okay, still pretty high. Anytime that we can add pounds via growing operations in Kentucky for less than they can do it out west, the markets will let us do that for a profit. And I think we are still in that environment. I think you will see opportunity. Right now, if I look at the March board and the October board, it's about a $30 difference, meaning futures right now says heavy feeders should be selling for about 30 cents more per pound come fall than they are right now. That means there should be opportunity to price some of these cattle at a profit. Be strategic about placing calves, be opportunistic, okay? If you're a backgrounder or a stocker operator and you see an opportunity to get some calves bought, you probably ought to jump on it. I think they will be there this year. The other thing to remember is we've got more tools than we've ever had to manage downside price risk. I spent probably the first 7 or 8 years of my career, and all I could talk about was futures and options, a risk management strategy. We've got, something, I won't say it's new, it's actually been around since 2007. but it's much more attractive now than it used to be. Livestock risk protection insurance. If any of you were in Bowling Green last February, I think it was, I did a program as Mid-South Stalker Conference on LRP insurance. I've got actually a video of that I could send you if you want to kind of see how that works. It's a pretty good way to manage downside price risk. So again, I think the market is going to offer opportunities. I think when it does, you want to grab calves if you're a stalker operator or a backgrounder. But I really do want to encourage you, if last year taught us nothing else, it's how volatile these markets can be. So, don't be afraid to pull the trigger and do something like covered cattle with LRP insurance or price them somehow. Even though you're giving up some upside potential, you're also eliminating some downside risk, which is very important. If any of you don't get cattle market notes, I work with two colleagues, Josh Maples at Mississippi State, James Mitchell at Arkansas. They're really good friends of mine. We've worked together for several years now, but beginning in late 2020, we started doing cattle market notes. So we take turns writing something. It comes out on Monday afternoons. The beauty of this is I write something once a week. I'm sorry, I write something once every 3 weeks, but you get something every week. And you also get exposed to some folks who are good economists in other states as well. So this has kind of been a fun little project. So this QR code will take you to the sign up. It'll say something up Mississippi State. Josh is the one that set up the MailChimp account and the sign up. So the email comes from him on Mondays, but we take turns writing. For example, this is Tuesday. I wrote yesterday's, and it was talking about the cattle on feed report that came out on Friday, 2 Fridays ago. I guess our next one will come out next Monday, and tomorrow at 3 o'clock, USDA will release their annual cattle inventory report. So we'll actually get a feel for how much smaller this cow herd got during the course of 2023. We'll get our January 1 USDA cow herd estimate numbers tomorrow. So we try to be fairly timely when we talk about those types of things. I also like to say this, that that there's several things that get written on a regular basis about the cattle markets. What I think kind of sets ours apart, because I'm in Kentucky, Josh is Mississippi, and James is Arkansas. We're all three in big feeder cattle states, so we tend to be a little bit more feeder cattle oriented and less so feedlot oriented. So we'll talk a lot about cow-calf background and stock operations, the type of operations that we have in Kentucky. With that, I'm going to stop and answer any questions you might have. I appreciate the invite. Thanks for having me. I've got my contact info up there. I am notoriously hard to catch in the office because I run the roads and run my mouth a lot. That's kind of what I do. If you call me, do leave me a message. You can also reach me by email pretty much anytime. It's rare that I can't get back to you by email in less than 24 hours. That's kburdine@uky.edu. If you're on Twitter, I'm at kycattleecon, and I will stop sharing and see if anybody has any questions.
All right, folks, I have all of your microphones muted. So in the lower left-hand corner, you have a little microphone thing. If you got something on your mind, then unmute your microphone and ask Kenny. Appreciate the presentation there, Kenny. I was excited to hear that we're going back to the fall of 2023 prices. That sounds like good news.
I always say I can be wrong, but I feel pretty good about it. So.
And Greg, we've got some people also that are participating on a phone. So we may need to email Kenny your QR code.
Yeah, of course.
Those individuals, as well as, if you can't complete the survey because of the QR code, we can email that to you.
I have put a evaluation survey up here on the screen. I hope you can see that, Jason. You probably can. Tell me that you can.
I can.
And you can hold your phone camera on it and follow the directions or click that link. But we still have plenty of time for questions for Dr. Burdine, so feel free. Bound to be some questions out there.
I will make a comment too. as people are thinking about, what question that they want to ask. But the beef enterprise budgets are available online on the Ag Econ website, agecon.ca.uky.edu. I'll put that in the chat, but I know the beef enterprise budgets are there, and Kenny, there's several different tabs available, and those are interactive budgets that you all can take advantage of and plug in your actual numbers. So you may want to comment on that for a second.
Yeah, I actually just updated those. So as we're talking here, Jason, I'll go into the chat and I'll drop in that link right now. Now, for clarity, that's going to take you to our budget page. So you'll have to scroll down to the livestock budget and find the beef one. But I actually updated that one in the fall of 2023. Thing I always tell people is they're spreadsheets for a reason. There are some default numbers in there, but as soon as I put a budget out, it's going to be wrong because things are going to change. So, I want you to use that, put in your prices, your costs, things like that. They're pretty good little tools. We've got a spring calving cow-calf budget, a fall calving cow-calf budget, and then I've got both kind of a feed-oriented, what I'd kind of call a backgrounding budget, and we've also got what I'm going to think more like a stock or a grazing type budget. So they're pretty good tools, and feel free to play with those. If you have questions, you're more than welcome to reach out.
Okay, Kenny put that in the chat where you can get to that real easy. We've still got great participation, 23 of you on here. Appreciate everybody participating tonight. We're going to be on for about 10 more minutes if you have anything to talk about. Next week, Dr. Morgan Hayes will be talking about equipment and facilities on your farm, and she's gonna do the second session of our program. So remember, we'll be back on same time next week. Dennis, have you got a question?
Yes, I sold 3 coil cows Monday, and they brought $7, $14. So it's going to be hard to get a replacement cow back. Or coil cows are bringing more than a calf cow by dollar.
Yep, the cull cow market is definitely strong, and that's one reason why we're not building this herd. The other thing is it's not just so how do I say it? It's not just the money that you don't get by keeping her, right? But it's also at some point, if I'm thinking about expanding the cow herd, right, I've got to think about either buying heifers or holding back heifers. So it's also the heifers that I don't sell. And that matters a lot more in this interest rate environment than it would have several years ago when interest was about half what it is right now. So I don't know. I think the cow herd probably stays small for a while. And that's one reason why I think we're probably going to see some good prices for a few years here back to back. So I agree with you, Dennis. Good point.
Kenny, I've got a question. I'll ask you to speculate statewide here. In Butler County, a lot of cattle pasture and hayland has had corn and soybeans growing on it. But now we're looking at $4.30 corn instead of $7 corn. How long do you think it'll take, or do you think some of that grassland will become reestablished and have cows on it? I'll put you on the spot, brother.
No, you can ask, and I apologize, but I think do I think some of that can go back into pasture? Yeah, but it's not gonna be a lot of it. It's just the truth matter is, it's a whole lot easier to put pasture ground into row crop than bring it back, right? And the example that I like to use, and we really saw this the first time, when was that? Was it 2000 and when the ethanol boom hit, right? The first time we saw $5 corn, I think it was 2007 to 2008. If you look at the census of ag from 2007 to 2012, we added about 500,000 acres of corn and beans. And folks, that came out of pasture. Well, it came out of pasture ground that had row crop potential, right? historically in Kentucky, we always ran some cows on ground that had some row crop potential. And the cost of doing that has just gotten so high. And, you think about it, in a lot of cases, the fences on that pasture ground weren't in really good shape, right? So what happened when they converted it, right? Fences are gone. Okay. It didn't seem like a major loss at the time, right? But now if I go back into that same ground now and try to re-fence it, it's a whole nother story. So to answer your question, I think we could see some, but I think the vast majority of what converted to row crop ground is going to stay there. And it's, even think about something, it's even at 430 corn, I think you said, Greg, think about what a realistic rental rate is on that ground. Can you really afford not to take that and instead tie up 2 of those acres to run a cow? The answer is going to be probably not in most cases, unless calf prices are they are for a long time. So I think the cow herd's going to stay small and picky for a while. I don't think we're going to get back to where we were 10, 12 years ago.
All right. Now, appreciate those comments, Ken.
Yeah, sorry for the long answer, but
It's a difficult question to answer.
We had 1.2 million cows in Kentucky. Gosh, I can't remember when that was. It was our last peak in the state, and we're under 900,000 now. I think we lost another probably 50,000 cows in the state over the course of 2023. And I just can't see us getting back over 1 million personally.
All right. Other questions for Dr. Burdine here? We've got time, but we're not gonna keep everybody here if y'all are satisfied. And of course, Kenny's really good. He's very responsive. If you think of something, you can send it to your county agent, or he told you what his email address was earlier, and he's just very responsive and really good to work with. So Kenny, thank you for being with us tonight.
Yeah, thanks for having me. I wish everybody good weather and good prices in 2024.
And this
Amen.
session is recorded, so if somebody would like to study some of those graphs a little bit more and let them sort of digest, especially, as you sit there and work your own budgets and think about different things, we can send those to you. If you let us know if you need it.
All right. Remember
Just
next week.
just stating the obvious, Greg. One of the things that I've been seeing is we're losing a lot of this ground, especially cattle ground, to development. I was just visiting some farms in Florida, man. I mean, it's unbelievable the amount of cattle ground lost there. And you can take Warren County, just in our own development, just all the cattle ground that's been lost there, in Barron County too. It's a lot of this development ground is never coming back out of residential.
Yeah, that's an excellent point, and I know our friends from Franklin that are on here can certainly understand that, as well. I see some
Definitely
heads
seeing that
shaking.
trend down this way as well.
Well, we will be back on here at 6 p.m. next week on Tuesday night. Dr. Hayes will talk about cattle working facilities and layout of farms. And I know most of y'all's got your farm exactly like you want it, but if you think there's anything you'd maybe like to do or change, we're going to have a great program on that topic next week. I'll end the recording now and see all of you next week. And one more time, thanks, Kenny.
Thank you.
Enjoyed it.